Welcome to BizTech's first property show. Starting this week, we'll be looking at property markets globally and regionally, and to give you insights to better help you manage your existing properties, get better returns, and also help you make better decisions on your future purchases. Our guest today is Jason Dasey. He's a familiar face across the region and is currently a journalist with ABC News in Australia. He's also just finished a stint with Property TV in Australia. Welcome to the show, Jason. Good to have you on the show.
Good to be here, Brian, coming to you from my lovely house in Brisbane, Australia. So I'm well placed to talk about Australian real estate with you and all your viewers across Asia.
Now, our focus today, yes, as you pointed out, is really a look at the property market. Now, in Australia, in 2020, and there's been a lot of changes and potentially, of course, let's use our crystal balls to see what we should be looking out for in 2021. Now, Jason, let's start by taking stock of the current situation and perhaps giving us an insight into how the Australian coronavirus response has been driving markets in real estate across Australia.
Yeah, well, look, as many of your audience will know, Australia's had a very good coronavirus response. We did have a blip earlier in the year with Melbourne going into lockdown for a second time, but the figures are really, really encouraging. And Melbourne has had 0 cases for the past 15 days and 0 deaths. And just about every city in Australia has a coronavirus very much under control. And that means that borders are slowly reopening, and the way that things are going on the property market is very buoyant. People are buying houses. There's a lot of consumer confidence out there. I was talking to one of the real estate agents in my area here in Brisbane, and he said, Jason, the real estate market's hot at the moment. You know, we made 13 transactions over the past week here in the inner east of Brisbane. So the fact that Australia's really got a grip of coronavirus and is really the model for many different countries across the world is really driving that property market, whether it's residential real estate or commercial real estate. So it's a pretty bright picture here in Australia. And I think going forward, people are expecting things to continue into 2021.
But Jason, let me ask you something. So operationally, how are these transactions happening? Are people actually taking virtual tours like they are, for example, in Singapore, buying the properties, some of them unseen, literally face to face? Is that how it's happening in Australia?
To a certain extent, yes, Brian, it is happening that way. I've got a friend actually who's a property agent on the Gold Coast. His name's Andrew Ramsey, and he sells high-end properties on the Gold Coast. And he said that a lot of his properties are being sold virtually because the border between Sydney and Melbourne, the 2 biggest cities in Australia, is still closed to Queensland. So people cannot physically come from Sydney or Melbourne without going into 14 days of hotel quarantine. So he's doing a lot of his sales virtually. People are taking virtual tours, and he said business has never been better. And that's even without the overseas market. We know the Gold Coast, the tourist part of Australia, has had a massive influx of Chinese investment over the past 5 to 10 years. A lot of that's disappeared, but it hasn't stopped the market really going gangbusters there on the Gold Coast. So property agents have had to change their strategies. They're doing a lot of things online, and they've had virtual auctions and everything like that. Now with coronavirus restrictions easing across the country, we are getting back to the kind of normal ways of doing business, but there are still some coronavirus measures in place. So yes, the answer is yes. Virtual tours are being done, and real estate's being sold at a really good rate in all the capital cities across Australia. Even Melbourne has bounced back. And when we compare where the capital cities are at the moment compared to 12 months ago, it's really not much different. In fact, there's been an increase in many of the capital cities.
Okay, and let me take a snapshot then from a macro perspective and give you some key highlights. Now, the RBA cut interest rates the previous Tuesday. And what's happened is, as you pointed out also, consumer confidence has been consistently improving. Now, auction clearance rates have been very consistently strong, not only in Melbourne and Sydney, which they traditionally are, but across Australia. Now, buyers and sellers are transacting. Transaction numbers have increased. Banks increasingly are keen to write new business. Now, that's obviously a positive sign for housing markets. And then you have things like loan deferrals, which have been consistently falling. And that's a good indicator that people can afford to pay for their properties. I mean, this is one perspective. And there's a little likelihood of an avalanche of forced mortgage sales. So the banks are taking a very measured approach, even to difficult properties that are having difficulties. Now, also I think the key thing that is driving this confidence is the rate cut. Also, the fact that the guaranteed of rates being low for the next 3 years gives people, the home buyers, confidence and also investors confidence to put money in the economy and into the housing market. I think one of the key things with that is also the fact that I know that in some markets in Australia, you can get as high as 6 to 7% return and a yield on your property. But if your interest rates are low, basically you've got on a positive cash flow property because of the spread. So I think, Jason, those are some of the macro stuff that's happening in the market that's fueling this overall optimism.
100%, Brian. And you mentioned that historic low rate cut from 0.25% to 0.1% across Australia. And, you know, you've lived in Australia and you know what it's like. And we remember the old days of, 18% and these crazy figures for mortgage rates. So, I mean, it hits home immediately that we've got the perspective of getting money cheap for up to 3-4 years. And even in my situation, I locked into a 3.98% mortgage rate a few years ago. And I'm like, wow, that's really, really good. And now I'm looking at it, and some financial institutions are offering around 2% or even under 2% for mortgage rates.
Wow.
That is stunning when you consider historically where interest rates have been across Australia. So this is all factoring into the way the real estate market is reacting here in Australia, and the way we're seeing transactions. I walk out into my street there and there is a for sale sign goes up. A couple of days later, it's down. Our house is sold so quickly. We're in the process of looking around, me and my wife, looking for a larger place. Okay. And we went to one around the corner the other day, and there are 2 people in front of us putting down offers of for immediately. And there's these open homes. Of course, there aren't the coronavirus restrictions now on open homes anymore here in Queensland. So this is just anecdotally what we've seen. But from a macro point of view, everything is driving Australian property prices up, given Australia's good response to coronavirus, the fact that consumer sentiment is looking a lot better now as well, and those historic low interest rates. It's a very, very rosy picture. And you mentioned the auction clearance rates in Sydney and Melbourne. Like, you compare them now to 12 months ago, and they're as good, if not better. And it's a similar story in many of the other capital cities. The only capital city that really isn't doing as well is Perth, where you used to live, of course. That, of course, had that slump with the mining boom a few years ago. That's not as buoyant as many of the other capital cities. That's actually down 0.1% compared to 12 months ago. Melbourne's down 2.9%, but every other capital city is up. And where I'm in Brisbane, it's actually, even with coronavirus, it's gone up 2.7% in the last 12 months. How about that? And Adelaide, 3.5%. So that shows you that this coronavirus thing isn't really hurting Australian real estate at all.
Okay, but then let me be the devil's advocate. And then there's another school of thought that is saying that this is basically calm before the storm, because the Australian market is just poised to crash. Now, there's a couple of key indicators behind that. One of the key things is the fact that the market has been supported by unprecedented support from the government, for the Morrison government. Now, the government has been obviously propping up the market by cutting interest rates to record lows, and very importantly, supporting 3.5 million workers with the JobKeeper scheme. So hundreds and thousands of mortgages are still, and business loans are in deferral as well. So now, when all of these support measures are taken off, and if I understand correctly, in Australia, different measures are taken off starting around March, that's where we're going to see some stress in the property market.
Yes, I think there is some truth to what you're saying. Of course, we have JobKeeper and Job Seeker. Job Seeker is people out of work trying to find, getting their unemployment benefits. That's more than it used to be because of coronavirus, but it's slowly being whittled down. And by the time we come around to 2021, it's going to be quite a lot less than now. And JobKeeper is paying companies to keep their employees and giving them money to pay them. And as you say, these will be taken away by March of next year, or they could be extended again, who knows? However, the feeling is that because the Australian economy is now ramping up and getting back to where it used to be before coronavirus, the hope is that the Australian economy has recovered quick enough to really make that financial cliff, not as bad when the supports are taken away in the first quarter, second quarter of 2021. So we're going to have to watch and see with that one, because the other thing is that people in Australia have more money in their pockets because they're not traveling internationally.
That's
people
right.
Are saving money. A lot of expenses. They're not eating out as much and everything else. So this all factors in as well. So yeah, we'll have to wait and see. We need to have some caution when it comes to these financial support systems from the Morrison government, which was, of course, came into power in May of 2019 as a Conservative government. But it's using a lot of these levers, I guess, to try and support the economy.
But Jason, one of the things that also we need to keep in mind is the fact that Australia has been very, very dependent on the property market in certain pockets on overseas buyers. It's not just Chinese buyers, but also buyers from Southeast Asia, particularly Singapore and Malaysia. And Melbourne and Sydney markets come into mind, and specifically inner city, high rise, high density developments. So the Docklands in Melbourne is an example. Now, currently, some of those pockets of markets are oversupplied. What are your thoughts on that? Because that is not only oversupplied from a sales basis, from a new home purchase basis, but also from a rental yield and also vacancy rate perspective.
Yes, you mentioned Docklands, and that was actually listed as one of the most at-risk areas because of oversupply of apartments. In fact, in Docklands, there will be 1,307 new apartments built in the next 24 months, and that's 12%. It'll be 12% of the total apartment area. Central Melbourne, 4,744 apartments are due to be built, and that'll be 13.6% of the total apartment area, so substantial. But there are other areas as well. We're talking about Mascot near the airport in Sydney, Roose Hill, which is the northwest of Sydney, and even here in Brisbane, an area called West End, which is quite close to the South Bank and the city area, that's oversupplied with apartments. So there is softness in these areas, Brian, you rightly point out. And of course, coronavirus is kind of linked in with this because of coronavirus, and even though it didn't hit Australia as much as it did other countries, people are reassessing whether they want to live in this high density apartments. And the other thing is people are working a lot more remotely. So it's not as attractive to live in Melbourne or Docklands, where you've got that sort of convenience and access to the city, because of the way we're changing the way that we work, and also we've reassessed the way that we live. In Australia, we've always had that problem with regional centres compared to, say, the UK and the US. And we've always lacked good services and infrastructure and broadband. But now there's a hope that in regional Australia, we're going to see some of these, smaller cities or bigger towns, whether it's an Albury or a Ballarat or Newcastle or Wollongong, an Armidale. We're going to see these towns and cities maybe grow, and we can get a real sort of change from our density on the coast with the likes of Sydney and Melbourne having more than 10 million people. So I think that's why we are seeing the softness and the vulnerability in these inner city areas where we definitely have an oversupply of apartments and plenty to be built over the next 12 to 24 months.
Now, Jason, you highlight a very good point, because we already see that trend in markets like the UK. So, people have been moving out of London this year, and property prices in the suburbs and out of and in the high-end market in large country estates have gone through the roof as people realize that, hey, we can basically commute. We don't have to commute anymore. We're working from Zoom anyway. Let's stay in a nice country estate and pay the same amount of money as we probably did in Mayfair or Kensington or so forth.
Very, very true. And, you know, I'm a proud Sydney boy. You know that. I grew up in Sydney, went to Sydney Boys High, started my career at the Sydney Morning Herald. And when I moved back from Asia, from Singapore and Malaysia, I strategically made the choice, and this is before coronavirus, as you know, to choose Brisbane. Why Brisbane? Well, lifestyle. It's more relaxed here. You know, it has a kind of country town feel, but it's also a big city. And also I saw the opportunity within the real estate market, because when we look at the prices here in Brisbane, it's maybe a third of what you'd pay in certain areas in Sydney and perhaps half of what you'd pay in Melbourne. So there is a feeling that people are reassessing where they want to live, how they're going to work, and also looking at the way the capital appreciation of certain areas might be. Sydney and Melbourne continue to be very expensive when we look at the way property markets have gone. You know, since 2012, the Sydney market has increased 73.2%. The Melbourne market, 53.2%. That's since 2012 in the last 8 years. Brisbane, 24.7%. So that gives you the idea that maybe Brisbane's a bit undervalued and maybe Sydney and Melbourne are perhaps overvalued. So people are looking, I think, with a combination of things for value, not just what they're going to pay now, but also for a capital appreciation going forward, the quality of life, and the infrastructure and the services that you have in that particular place, which is why Southeast Queensland remains very attractive.
And what sort of rental yields would you get on properties in general in Brisbane?
Well, that's the good thing about Brisbane, because you're not paying, you know, massive amounts. You know, like I think the median price here is around, let me have a look here, it's 503,000. That's a median property price. And compared to Sydney at 872,000 and Melbourne 689,000. So you're looking at 5 to 6% rental yields here in Brisbane if you pick the right area. It's very, very good. Whereas in Sydney and Melbourne, paying that kind of price for houses, it's very, very hard to get that sort of value on your investment. In fact, where we live now, we actually bought and rented it out as an investment property for about 2 to 3 years, and we were getting 5% rental yield, which is pretty good. We're pretty happy with that. So I guess there are certain markets, and there could be smaller cities or areas that maybe won't be so obvious where the rental yields are actually better than whether you're in Sydney or Melbourne in that kind of, you know, I'm going to buy an apartment in the center of Sydney or center of Melbourne next to a university and try and get the rental yield there and the value there. The value often isn't there.
Yeah, absolutely. And I think that's something that we will take a deep dive into in a future show with you, Jason. Now, Jason, any final words before we end here?
Let me think. Yeah, I've got some pretty interesting stats here about the way things have gone. You know, as far as auction clearance rates, we've got Sydney around 79%, you know, Melbourne at 78%. This is the most recent figures we've got from CoreLogic. I guess, yeah, just that consumer sentiment is very important. Westpac Melbourne Institute Index consumer sentiment is at a 7-year high, and it's increased 35.3% since August, which again tied into this feeling here in Australia, whether it's ill-founded or not, that we've got past coronavirus and that we are getting 0 cases in many parts. I think 4 of the last 5 days across Australia, 0 cases of coronavirus, apart from people returning from overseas and you know, showing they're positive to COVID-19 in hotel quarantine. So when we look at Europe, when we look at the US, and even parts of Asia, we realize how lucky we are here. And we are feeling that confidence when it comes to the recovery of our economy and the way things are. And people have thought, well, it wasn't as bad as I thought. But the big question is that financial cliff, when the support's taken away next March, only 4 months away, Brian, how is the market going to react? Are we going to recover as quickly as all the indicators are? But people are feeling very, very confident here.
Jason, thank you very much for giving your time and your insights. We've been speaking to Jason Dasey, ABC News Australia journalist and former presenter with Property TV Australia. I'm Brian Fernandez for BizTech's Property Show. Check out www.biztech.asia for business and technology.